Look, just focusing on the UK, I think my experience over the years, whenever there's a gap because one part of the capital market moves away or gets scared, gets filled by somebody. I think it's getting filled by private money at the moment, and the institutions are sitting on their hands a little bit. But in the US, there are kind of two main bands of money in the US. One of what we would refer to as the global diversifiers, who have got beyond the sort of usual assumption of US capital, it won't go abroad unless the returns are higher. They're just diversifying around the world. And I think some of that capital is landing in Europe, not necessarily in London. Well, a bit of it maybe, but not that much. And the rest of the US is more the domestic investors who stay onshore and then put some money out through value-added opportunistic managers abroad. I think that is pretty much the status quo. I mean, some of my colleagues in the US are beginning to regard Brexit as a bit of a bump in the road and not really relevant for the US. It affected markets for quite a while, and it seems to now have calmed down. Certainly from a US-centric point of view, they're far more worried about Trump and whether Trump will get in. In Asia, I think, again, the Asian institution seems to have just paused with regard to the UK, not with regard to continental Europe. I think they're still busy. And that is an immediate effect. We get asked to do some interesting tasks now and again, and one was trying to find a home for 300 million of Chinese equity quite quickly. And they started off asking us about Europe and the US, and in the end focused on the US. Immediately after Brexit, that was the message: ignore Europe. So the flows have changed. Whether that calms down and goes back to the status quo 12 months ago, we've yet to see. It hasn't happened yet.
I think very roughly, more capital into real estate and real assets is definitely a trend. But the last couple of years we had already seen unprecedented amount of capital going into markets like London. So from that, I think we will see a short-term dip. Brexit has definitely had an impact on the destination of the flows. We've seen a lot of people who are continuing to look at London as a long-term growth market, but waiting for some more correction in the market, which we do expect to happen. And yes, I agree that in the continent it's been a lot more active. I think, rightly or wrongly, a lot of people see Germany as closest to the safe haven in Europe at the moment, so that's probably where the most interest is.
I think it's very mixed messages when you look at Asia at the moment. So quite rightly, the people who have to go through rigorous board approval processes need a bit more understanding, need to see a bit more certainty. So we're not seeing too much of that institutional money or sovereign wealth money from Asia coming. However, there are examples of people still active, and I think everyone's got to remember that a lot of these guys are trying to set up global portfolios, and a lot of these guys have bought into London already, so they feel slightly overweight with their global portfolios. But as Will said, I mean, what we are seeing is a lot of family office money, particularly from China, from Hong Kong, from Thailand actually at the moment. And I think really that is looking at London as though, I've got the currency advantage at the moment. It's got slightly cheaper. I can suddenly buy some high quality assets, and in 5 years' time, hopefully the currency will have rebalanced, and there could even be some yield shift in the future. So I think, when you look at London at the moment, it's probably more Middle East, Asia family office, and what's encouraging is a lot of European institutional money looking at London and the UK. We haven't really seen too much from the North Americans from the UK perspective, as Will mentioned. I think they've got their own issues. However, you know, the opportunistic capital from the US is making a shift and wanting to get into Europe. You know, they've bought a lot in the UK. You know, Italy is rising with a lot of interest, whereas others we're seeing set up more new core plus funds rather than the really opportunistic funds, and some of them are wanting to stick to the main countries of Western Europe and probably the bigger cities for liquidity issues.